Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today I have a gem for you. We're going to talk about a poor man's covered call trade for which I used Bristol Myers perfectly. So I want you to stick around. This trade I'm absolutely feeling wonderful about. Now look, before we get there, I'm going to show you some of my numbers for the year as we've crossed a milestone for this year. We're also going to talk about what I sent to the members about this poor man's covered call trade. I'm going to show you the real trade, and then we're going to go to the chart, and I'm going to show you exactly why I did this trade. It's very important that in this stock market where the Dow was down some 1,200 points in one day this week, that we stay engaged, we stay the course. So I'm going to show you exactly how I stay the course. I'm going to show you the closed trades for this month of September and show you how much money I have made. Put cash flow on the table. So hey, look, if you like anything you hear today, I want you to subscribe to the channel. It's right there and it's free. I come back every week, show you timely and relevant trades to try to up your game. I'm here to motivate and inspire you to get off the bench, get in the game, generate cash flow so you can live the good life. And hey, if you like this video today, bang that like button as it lets me know you like what I'm doing. Now what we're doing is this: we are crossing a milestone for 2022. This stock market has been wrecked this year, but look at what I've generated this year selling premium. My overall portfolio is down just like everybody else's, but that doesn't mean we stop. These are tools in our toolkit. We still have to build the fence, right? We still need to stay the course. We need to eat, right? We need to pay the Verizon bill. We need to pay the credit card bill. So we have to pick up crumbs along the way. My trades this year haven't been as big. You know, I'm not making $3,000 and $4,000 a trade, but we're picking up crumbs. And as we pick up every single little crumb opportunity, right, that just opens up for another opportunity for more crumbs. And that's what I do. Okay. I make it flow like water. It becomes such that this is my job in retirement. Right? I'm going to generate cash flow every opportunity I can. Now, that's important to understand because I will buy back my covered call options early so I can pocket that cash flow, but then I could look possibly for another trade, maybe double dip in the same time period. Now, look, if you're new to this channel or you're new to the covered call strategy, it's very simple. We own stock. We're going to give somebody the right, but not the obligation to take our shares from us at a price we pick. Yeah, we pick the price. We want them to pay us for our shares. Now, that's a right, not an obligation. So essentially, it's a game. We're going to give them that time frame, and they're going to pay us a per share premium. That per share premium is the cash flow I'm always talking about. When I make a trade where I put $500 of covered call premium in my wallet, that's the cash flow that hits the table right now. Regardless of where the trade goes, I have the cash flow on the table. I'm paying the bills. Now we have to manage these trades, right? And that's what I do the best. That's why you're here. That's why you'll stay here. That's why I want you to subscribe to the channel, because I show you how I manage trades. It's not just me placing a trade or showing you trades that I will do. It's about managing the trade. Maybe you don't want your shares taken away. Maybe you want to roll up or down. Maybe you want to learn something. So I want you to subscribe to the channel because we're going to be talking about this more and more. I've set up my YouTube studio, and in fact, we're getting ready to do 2 to 3 videos a week. So stick around. Now, crossed the milestone, $50,000, a little bit late this year. Actually thought I would get there earlier, but you know, with the 9 to 5 and everything I'm doing and the stock market crash and we're only picking up crumbs, it's understandable, right? So for me, think about this. Just 3 years ago, I hit 49,000 for the entire year. Then in 2020, I had a big year of 109. Last year, 104. So sitting here averaging $6,300 a month in this stock market, I hope that inspires you that even in a stock market that is crushing, we could still use the stocks we own to generate cash flow. Let me show you what we've done this month. Now, as of right now, September brings in $1,968. That's cash flow on the table. The first one that jumps out at me is the NVIDIA trade. Sure, I pocketed $1,047, but look at the strike price. You know, so we're seriously in the hole with NVIDIA right now. I better have wanted to own NVIDIA because it's trading in the 140s right now. And I'll tell you what, I'm already down on the position. Now, again, it goes back to managing these positions. I'm involved. Yeah, it sucks I'm down, but now I have to manage it. And manage it doesn't mean just managing a current trade. Now I have to manage the strike prices when I get involved in a trade, right? I do not want to wake up after placing a cover call trade on NVIDIA and getting squeezed because the thing got great news and it's popping. Okay, we have to make sure we manage our strike prices. And I'll be honest, over the past 2 months, I've actually missed on 2 trades with Morgan Stanley and Gilead where I had to buy them back, paying more money than I made. And I'll tell you, that's a kick in the ribs because those trades are premium only trades using the poor man's cover call. That means I'm losing money because the stock is under my Leaps call option price. And here we are. I can't even sell the Leaps call option for a profit yet. So I'm going to have to keep spinning those plates. We're going to stay the course, okay? So right now we're looking good. My goal for every single month is $2,500. We still have many days left in this month, and I have many trades left on the board for September. September could be a $3,500 to $4,000 month. That's cash flow on the table. We love it. We pay the bills, okay? So we are going to continue to use our stocks, even though they're down, to generate the kind of money we need to live in retirement or pay some bills or live the good life. You hear me say this all the time because this is the reoccurring theme with me. Remember, this is what Jerry taught me. When he was 50, he used the stock market to generate his income. And he told me, John, the bills do not stop. You need to have the mindset that you do not stop. And I don't. Let's go ahead and take a look at that Bristol Myers trade as I want to show you exactly how it's playing out. Now, I'm going to encourage you to pay the 45 cents a day to join my membership. I give you 1 free month on top of that. Look, the membership is all about seeing the world through my eyes. I talk about everything selling premium, putting money on our table using the stock market, and you see me doing this all the time. Do you understand? My members see every single trade in and out. They understand why I place the trade. They understand why I manage the trade. And you also get to see what I'm about to do. Now, in this case, we're going to talk about Bristol Myers and how I thought it was a great opportunity to pull the trigger on using it for a poor man's covered call. Now, I only bought 1 Leaps call option here. I could have bought more, but, I wanted to test the waters on this trade. So let's step back for a moment. When I've done these videos on the poor man's covered call early on this channel, I've always talked about using a great S&P type company when they get slammed. When they get slammed and you know that it's a great S&P type company, you know the news is short term, but we're going to use that opportunity in the near term to pick up a Leaps call option when it's at the low. Now, for me, using Bristol Myers, Merck, Intel, these are like utility stocks to wealth managers. See, they know they pay the fat dividends. They know they have a mature business. They know they're profitable. So when they slam them, they buy low. And time again, they always find themselves right back to where they were. Hey, I've seen this. I've lived this. Bristol Myers had gotten crushed because it got some bad news with one of its drugs. And it did fall such that it gave me an opportunity to use the poor man's covered call. Now, I could have bought shares here, but I'm going to use the poor man's covered call in the way I believe we should really be using it. It's getting crushed. Call options are absolutely priced for nothing. So I'm able to pick up a deep out of the money. I think in this case, I'm going to pick the June 2023. I'm going to pick a strike for which the time value in the option is so small, my very first cover call premium will pay for it, will pay for the cost of the trade. Okay, and that's what I did here. I sent this to the members. I said, look, right now, I went ahead and I purchased a Leaps call option on Bristol Myers. Okay, when I did the math, and I'm going to show you the math here, I bought the June 23rd. You can see it right there. June 23rd, 40 strike. I paid $27.45, paying a mere 20 cents in time value. Now, the poor man's covered call is simple. What we're going to do, in lieu of buying shares, we're going to buy the ability to take somebody's shares away from them deep in the money, and we want to give ourselves time. So by picking the June 2023 Leaps call option, it gives me 8+ months. So what we're going to do is we're going to look to pay a price where the intrinsic value in the option and the time value in the option is such that that time value is so small. Okay, let's think about the call seller here. Okay, this might help you really understand this. The call seller, The call seller had Bristol Myers shares. Said, look, I'm going to sell this June 2023 $40 strike, which is deep in the money. And I'm going to sell it for $27.45. What do they make? What do they make? They only make 20 cents on this trade, 20 cents per share. So the intrinsic value on this option is $27.25. So think of that. They're making 20 cents. I'm willing to buy that Leaps call option because now I have the ability to take somebody's shares at 40, and now I can write near-term covered calls. Because if my shares are taken away, I can go out, buy somebody's shares at 40, and then close the trade if I had to. Okay? And remember, the cost of the trade is 20 cents. So my covered call, my near-term covered call, I need to cover the 20 cents, make profit on the other, so this can be a profitable trade. Now you say, well, why would you do this? Why wouldn't you just buy the shares? Well, think about what I'm doing. I'm paying a mere $2,700 for this right to take somebody's shares at 40. Now Bristol Myers is trading for what? $67.45. That means if I'm going to buy 100 shares to do this strategy, I have to pony up $6,700. So I'm using less capital. Think about this for a second. Say I really bought into this strategy and I just had enough to buy 2 Leaps call options. I'm able to generate twice as much cash flow versus putting up $6,700 to do one. This is the amplification of your cash flow returns using the poor man's covered call. Now we want to do this right, so we have to make sure we know the numbers. Let's go to the initial trade setup that's in my poor man's covered call tracker, for which you have access for free as a member. But look, if any of this interests you, I have 1 free month membership, and it's like 45 cents a day. Come on board, see the world through my eyes. And I'll tell you what, you're going to be surprised that all of this you see here on YouTube is real. I'm just giving you a little sliver of it here on YouTube. This happens every single day because the bills do not stop. My mindset is such that I have to do this, have to stay the course. Let's go over to the poor man's covered call initial trade setup for this trade. Now, I'll be brief here. When I did the initial trade setup, I think I plugged in some wrong numbers. This is a snapshot of that trade. I have all of my initial trade setups inside of my poor man's covered call trackers for each trade. So right now, this is Bristol Myers. I've customized the poor man's covered call tracker to this trade only. Here's the numbers and how they break down. At the moment of this trade setup, I went ahead and picked basically the 97 Leap. Understand, I buy the right to buy somebody's shares at 40, right? By buying this Leaps call option, it's the 97 Leap. So the 97 Delta Leap means Bristol Myers moves $1. This Leaps call option that I'm paying $27.45 for, it will move 97% of a $1 move. So we're almost getting a mimicked move from a stock ownership versus a Leaps call option ownership. So that's the beauty here. Now, when I do the setup here, notice that it's 20 cents. You see 38 cents, but it's 20 cents when we run the numbers. 20 cents. So when I run the numbers for my very first trade, look what we're going to do, right? I'm going to do this when Bristol Myers is trading at 69. I'm going to pick a 30-day strike. I'm going to get paid $2.38. Remember, what's the cost of the trade? It's 20 cents. So $2.38 minus 20 cents. That's going to be $2.18. So when we look at the math on this trade, you could see that if I have my shares taken, I'm going to make some 13.4%. And if I don't have my shares taken away and the trade expires worthless, meaning I keep everything, but it doesn't finish above 69, this trade will pocket me 8.5%. I'm only investing $2,745. I am generating real near-term income as if I own the shares, for which I would have paid $67.45. Okay, that's why these percentage gains are huge, right? That's the important thing to understand. Let's go over to the real-time trade. I want to show you how this played out. Yes, this video is sponsored by me, my membership. 1 free month. Go to cptdashboard.com, click Upgraded Dashboard, and join me. Absolutely want to give you 1 free month. Go there and try it out. You get 1 free month, okay? And it's like 45 cents a day. Let's go to that real-time trade right now. Okay, so I send the members that email about me buying the leaps. A couple days have passed because I wasn't able to get the strike I wanted, the premium I wanted. So now Bristol Myers is trading a little bit higher. Here's the actual trade. And my initial trade setup does not reflect these numbers because of that. Do understand, the big money I was about to make, well, that's not the case anymore. Now I'm going to pocket $120 in premium. That's the covered call premium for this strike. But we're going to talk a little bit about the bigger money I'm going to make here because my leaps call option is going to move much higher. So as you can see, Bristol falls right here, big time, right? And this is where it starts to trade sideways to higher. Bristol Myers finds itself back above 70. So this is great, right? When its stock is getting hammered, 67X, that's when I strike. I pick up that leaps call option in the hopes that this big S&P type company will rally just a little bit so my covered call will be profitable. And that's what happened here. Call it luck, call it skill, does not matter. We're in the trade, we're making money. So now this is what I sent to the members. I said, look, this is a 28-day trade. We're going to put this on. I'm going to pick that 71 strike. You can see it right there. I'm going to go ahead and pick up $1.20. The stock was trading at $69.21. So the stock has moved some $2 since I bought that leaps. I tell the members exactly what we're looking to do here. Now I also show the members the leaps call option status. This is where I want you to focus. I make the $120 in premium, but this is where I'm going to generate big bucks because now the option is moving 97% of a $1 move. Remember, I only paid $2,700 for this leaps call option. I'm able to enter this trade with almost just a third of what I would have had to pay if I bought 100 shares. So as you can see, I paid $27.45. Right now, at the point of this trade, the leaps call option is trading for $33.85, right? So this is on 100 shares. Do the math. Right now, the stock is moving, and we're looking really good on this trade. Now, the covered call premium itself is making me 4.37% because that would be $120, $2,700 invested. So if I have to keep the leaps call option going, we're looking to generate that 3 to 4 to 5% going forward. This trade will end if Bristol Myers finishes above 71. If it doesn't, we're keeping this leaps call option. We're going to write another covered call. So here's Bristol Myers right now. Remember, when I do this, it's trading for 67X. It's now trading for 71X, and it's moving higher. Some great news came out. I'll tell you what, anytime a great S&P type company gets slammed like it does, gets slammed 10% on a day, that's an opportunity to consider the poor man's covered call. You can pick up your leap considerably less. Call options are depressed, right? Nobody thinks this stock is going higher. It's selling off. That's when you want to think about taking action here. Well, that's what I did. So as you can see back here, that's when we buy that leaps call option. Now, I tried to get the covered call off right here. It didn't happen. It starts to move. You could see all this buying. You see all the buying because big Wall Street knows this is Bristol Myers, right? So when this thing falls off from here to here, you have to really have the vision that Wall Street is going to bottom fish a great company. We're not talking about some fly-by-night company. This is a huge S&P type company, mature products, mature profits, dividends. And in fact, I think they increased their numbers for next year. You take opportunity when it hits you. We took this recent near-term fall. We're going to turn it into profit. Now, as the stock's moving higher, this is when I pull the trigger on that 71 strike. I figured at this point, the 71 strike is going to pay me the money I want. I'll let this trade go. If the stock finishes above 71, not a problem. I make the money that I dialed up in my initial trade setup. That's going to be a win. How many times can you say that you've had a win in this market? I wish I'd have done more, actually. And as you can see, look at what Bristol Myers is doing right now. So for me, if I actually own shares, we're getting back into that groove where this is where it trades. Back here, it was trading in this nice little groove. We talked about trading in ranges. You pick up here, you sell the covered call here. And as it dips off, you pocket the money. You just play this game. Just play the game. Hey, look, I'm going to leave it right there. Be safe, be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.